money isn't this abstract idea. It's a social idea. The form factors of how we do money and payments are already changing. CBDC is just part of this bigger story, which is the format of money is going to go digital. The biggest country in the world by population is going to have CBDC. A blockchain is simply a decentralized network of databases of computers. If I look over the next 5 years, the UAE could be really well positioned to become a hub or a center for digital money.
Welcome back to The Change Officer. I am thrilled to announce my guest today, the Global Head for Banks Research and the co-head of FinTech Group at Citi, a passionate leader who is truly changing the way we see the economy, Ronit Ghose. In this amazing episode, we talked about the future of central bank digital currencies, crypto, and whether it's a $2 trillion asset class that promotes individual freedom or versus platform company power. Last but not least, we talked about the new space race with China ahead on CBDCs. Are we going to run the 50s, 60s US-Russia space race again? Enjoy. Welcome to The Change Officer, Ronit.
Thanks for having me, Vuk.
And I'm super happy that you're here. Mm-hmm. I'm really excited to talk to you because I'm curious about a couple of these topics. I was aware of them. Some of them I'm not that aware of. Mm-hmm. And someone who's been in the banking industry for how long now?
Oh, too long.
Too long. And only with Citi for 24 years.
Yeah.
And someone who leads, your role is global head for bank research and co-head for specifically the FinTech team.
That's correct. Yeah.
Extremely popular these days.
Yeah. It's all about digital these days.
Exactly.
Yeah.
So I can't think of a better person to talk about the topics such as CBDCs, crypto, implications, opportunities, and what the future holds. So let's start from CBDCs or central bank digital currencies. For the sake of putting the conversation in the right context and bringing it closer to the audience. Yeah. Can you help us just unpack that and bring it closer to me and to the audience as well? What exactly are central bank digital currencies?
Sure. So money, you got to start with what is money?
All right.
So money has existed as long as human society or civilization has existed. So you can go back 5,000 years. So not far from here. Modern day Iraq, Babylonian times. And there's always a concept of money with society. But it's a made up idea. And that's the first thing that we need to remember. It's a fiction. It's a story. Now, in our day-to-day lives, we don't think about it like that. In day-to-day life, money is money. This is 100 of money. So exactly. We're in Dubai, so 100 dirhams, right? Or if you're in New York, $100. Or 100 euros. It's a fixed amount. And we don't think about it. We just say, okay, I have that money. I can go and buy something with it. I can save it. So I can buy something with it in the future, which is what saving is, deferred consumption. We just don't think about what it is. But actually, money has value because we as a kind of community, the society say it's got value. So right at the start, money was precious metals. Like gold coins. Exactly. Yeah. And then around the Great Khans, so the Mongols, they decided that actually carrying gold coins, big lumps of metal, when you're like on your horseback trading or otherwise rampaging, that wasn't very practical. So they were like, you know what? You take your gold, put it somewhere, and we'll give you a note. And that says, I owe you money. And the value is sitting in a store somewhere. And that's how banknotes began. Literally like an IOU. And at some point, one of the great Khans said, you know what? I don't need that to be gold. I am value. I am the great Khan. If I say, it's my word, if I say there's value in this piece of paper, there's value. And that's what fiat currency is. And this started over 1,000 years ago with the great Khans, and it's a revolutionary idea because the piece of paper, it says there's value, and you're like, but what's the value in that? But the great Khan has said it's valuable, and because he ran everything, if you didn't accept that piece of paper, he would kill you. Very simple. So money has value because society gives it value, and there's force behind it. Basically, a ruler says that has value, or a community gets together and goes, "I like that shiny piece of metal; it's got value." Right? Central banks arrive on the scene much more recently. In most of the world, central banks, like in the US, the biggest central bank in the world, the Federal Reserve, less than 100 years old. Now, the Americans tried after independence to have a central bank. They had one for a while. It didn't last. Because the Americans love the idea of, it's a big country, and they love the idea of decentralization.
Mm-hmm.
And one of the key things we'll talk about for the next half an hour, 45 minutes, is this concept of centralization versus decentralization. So if you were living in 19th century America, there was a dollar, but depending on where you were in the US, you'd have a different dollar note. And there are all these dollar notes. If you went from one side of the US to the other side, you'd have to keep exchanging your dollar notes. And then this is complicated. It was messy. And when the Federal Reserve arrived, there was like, no, this is the dollar note, the central bank. That's my money. It's uniform across all of the US. And as the US became this global power, that money then began to be used everywhere in the world, right? I mean, parts of Latin America, parts of Africa, sometimes in parts of Eastern Europe, that's more the euro. People use the dollar or the euro as their currency. Because the local currency is not valuable. Central bank digital currency in the 21st century version is actually a digital version of that banknote. Simple as that. So, just like, I don't know if you have any money in your wallet. Do you have a wallet, in fact?
Actually, very rarely I'm bringing my wallet with me.
Exactly. Yeah. Take a wallet.
Exactly. Maybe I have it today, but usually I'm on my phone.
Here's a phone. This is. I didn't plan this. It's just I'm making this up as I go along. Okay, here you are. Oh, that's a big note.
You didn't plan for this either.
I didn't plan for this either. I must have gone to the ATM. Okay, so this is a central bank physical currency.
Mm-hmm.
Today, you don't have your wallet because we just we use Apple Pay or PayPal or it's whatever. It's on our phone, right?
Yep.
But it's not the same. What's on our phone isn't the same as this.
Mm-hmm.
The idea of a central bank digital currency is that on my phone will be, or on my smartwatch, or on my smart earring, or wherever, I'll have a digital version of that banknote.
Mm-hmm.
And that's what a CBDC is. It's a digital version of that banknote. Today, what you have is the ability to pay. So you can go to the shop. You can go to the shop downstairs, wave your phone, and you've paid. Because a message goes back to your bank that says, can I pay? And the bank goes, yeah, Vuk's got money. And then the merchant accepts the payment. But there's actually not money in your phone or in your smart device. There's money in your wallet. So the central bank digital currency is going to be basically a digital version of, electronic version of that banknote. And it sounds really simple, but it's only possible today because technology exists in a way that it didn't exist 20, 25 years ago. You need tokenization.
Mm-hmm.
And tokenization, I'm sure we'll talk about Bitcoin later in this conversation. It's technology that's been working. I mean, the idea conceptually is much older.
Mm-hmm.
It's only in the last 10, 12 years it's actually working in the wild. Mm-hmm. So that's a little bit of a history of money, but also how we get to central bank digital currencies. It hasn't happened yet. The Chinese and a few other countries like the Bahamas are doing it in pilots. The Chinese are doing it at scale. But because the Chinese government are doing it, big tech companies like Facebook want to have their own tokens, and crypto is becoming so popular, it's on the agenda for everybody. Should we have a CBDC? Because governments and central banks don't like the idea of private companies. Having a private company issue money, like say a Facebook, takes us back to the almost 19th century idea, where there wasn't uniform money. Yeah, you had. Is
that what you're referring as decentralization or no?
Partly, the decentralization It's partly that, but actually full decentralization is when you have would be crypto. Central bank digital currencies is tokenization, but it's not decentralization, because the value of that currency, like the value of the banknote in my wallet, is set centrally by the central bank. The purchasing power will obviously change over time, but the value is set centrally. Technologically, it's a centralized database. It's centralized. It comes from a central authority. The value comes from basically society gives value. If society says to the central bank or the government institutions in the country, you have the right to issue money. You have the right to have a monopoly of force.
So basically, what happened? From decentralization, we went to centralization. Yeah. Then over the previous 10 years, we started decentralizing again, and we'll be talking about that more later, about crypto.
Yeah.
Basically, CBDCs are central banks' efforts to centralize again the flow of value and assets, right?
Yeah. So whenever you've had centralized states or authorities, like a king or a great Khan or a ruler. So you have centralized power. Normally you have also centralized money. In the 20th century, the standard or the norm in most places in the world was to have centralized power. There were obviously some failed states and so on, but most places. Now, in the 21st century, what we're in is we have the technological ability to, again, go back to almost a 19th century decentralization. And a lot of people, for idealistic reasons or political reasons, like the idea of actually, why should there be central power? Why do we need why can't I decide what type of money I want to hold? Now, of course, if you take the extreme, you can end up with a very complex, anarchic situation. You're like, I don't like your money, no. And that's what used to happen as you sort of traveled across the US in the 19th century. You started on the East Coast and you had a banknote, a dollar bill from an East Coast bank. And you went 100 miles or 100 kilometers and you got to another territory and there was another bank. You'd have to swap your old note for the new note. And by the time you crossed the country, that note you had from the East Coast, by the time you got to the South or the West, may not be accepted.
And that's happening even today on a smaller scale, but there is still, a fact that you need to change currencies if you're traveling to some countries that are not accepting dollars, or, you don't want to swipe your card because the fees are too high. So apparently and definitely CBDCs as a concept are bringing that transaction efficiency, if we call it like that. So when we talk about the appetite of policymakers and regulators who are looking at CBDCs now, how big is their appetite and what needs to happen in order for this to be? Because I can see a lot of intangible stuff around it, not that clarity is missing probably. People naturally feel for anything that they can't really understand, they feel a bit of, I'm not really sure about it. So how are policymakers and regulators approaching this now?
So if you went back 5 years ago, policymakers generally were not thinking about CBDCs. It was like an academic discussion. There was probably one major exception, which was China, where from about 2014 onwards, they've been doing quite a lot of work on the topic. But generally 7 years ago, this was not on the discussion table. If you go back to 2019, that's the year when you see a lot of central banks beginning to talk publicly in speeches and articles. And 2019 was significant. Not only were a lot of central banks talking about it, it was the first year when more central bank commentary was positive than negative. So in 2018 and 17, central banks generally, if they spoke publicly about CBDCs, would say, we don't need it, or what's the point? No one's asking for it. And even today, one of the biggest questions I get from, I talk about the topic is people say, but why do I need it? You don't have any paper money on you. and you're living fine, right? In Dubai.
Exactly.
Except when your phone runs out of battery. But
Exactly.
unless you have your plastic card.
True.
But, generally we're not, most people are not.
In developed countries.
Yeah. In developed countries, most people are not screaming for a new payment tool.
Exactly.
But there is this view that, before this thing came along, and, were we screaming for it? But now we're all addicted to it, right? Or maybe your whatever smartphone you have. We're all addicted to our phones. But before we were not. And so there's one school of thought, which is wait till it happens, and then consumers will realize the benefit. And the benefits there are many reasons, but the reason the central banks began to get interested in 2019 was Facebook announced in 2019 that
Libra.
They wanted to have their own stable coin. Originally called Libra and now renamed DM. So DM isn't just a Facebook idea. There's an association.
DM stands for?
So DM is the new name. Libra was the original name. And DM means day in Latin.
DM.
DM, sorry.
D-I-E-M,
DM. D-I-E-M. Yeah, DM. So there's an association. It's based in Geneva. There are lots of companies in it, payment companies, in venture capital firms, other, But the original idea, it's kind of a Facebook idea. And when they announced, and they were not the only ones, but they're probably they probably had the biggest impact. When they announced that we're thinking of having our own currency, I don't know if you call it currency, but it's their own token. It created, I think, a lot of concern among central banks. We were like, whoa. That's our job. Our job is to issue money, manage money. It's not your job. And it was interesting. At the same time, so Facebook announces DM. So the same year, a tipping point when more central banks now start saying, "We've got to do something." The other sort of impetus came, a country like China, when you have lots of, basically, particularly in urban areas, it's completely digitized. So payments. So the concern the authorities had was, well, there are two private companies that basically monopolize, or it's a duopoly, but they kind of control payments. Is that a good thing from a policy perspective? Now, if you're an investor or a shareholder in the company,
absolutely.
Yeah, but if you're looking at it from the regulator's perspective, you're like, what if there's a problem with one of the companies? Or what if actually you have, I can say, particularly among the older generation, not the young generation, but the old generation, what if they don't have the app? That's, these are two private companies. Maybe there should be a neutral or a state option. And so I think you call it inclusion or concern for, like a stable kind of, basically a state option that wasn't a private sector option. That, I think, drove the Chinese authorities. And there are some technological benefits as well. Payments can be a little bit more efficient. It can, on the margin, there are some potential technological benefits as well. But I think the technology exists, but it was really sort of this political and competitive angle that pushed central banks into going, no, we need to take this more seriously. And so where we are today is in China, in the last 12, 18 months, they've been doing trials. So, real people in real cities, half a dozen cities have been using, it's called DCEP. It's a Chinese CBDC. It's called DCEP, or at least in English, it's called DCEP. And yeah, people are, lots and lots of people are using it now.
So we are now at a stage, this is started way back. I think Sweden was the first country that tried out something like that. And then Bahamas, you mentioned, and now China. China is leading the way. What's in between having CBDs across the globe widely accepted and used?
So CBDCs are like the digital version of the banknote you have in your wallet, right? You still have a wallet.
Digital wallet.
Yeah. It's like a physical wallet with physical banknotes. In the future, I'll have a digital wallet with digital banknotes. If I'm in the UK or in India, will I use the banknotes from the Bahamas? No. Or from China? No. Maybe if I'm buying something from the Bahamas or China, and the seller says, actually the other way around, maybe I'm selling something to the Bahamas or China. The seller and the buyer says, I'll buy it from you, but I'm going to pay you in my currency. Today, you normally pay in dollars. Not always, but often it's dollars. Or you basically do a currency exchange. But it could be that the Chinese will say, great, I'll pay for whatever it is you're selling me, but here is a digital RMB. And and that could lead to the use of the digital RMB outside China. But what will actually probably happen is it'll just like, Chinese tourists come to Dubai Mall. They pay with their existing digital apps. In the future, the Chinese tourists will come and they'll pay with a DCP wallet. It could be on one of their existing wallets, that the payment company, or it could be in the banks. And then, like today, the money will get sent back to China to settle. Or they could hold it here. The merchant could say, I'll hold it here. Just like I'll keep, in the old days, like my wallet would be full of like banknotes from all over the world, right? Sitting there, not adding any value. But, there could be a spread of these CBDCs, but the bigger use case will be, most of it will be used inside the country. But because there's this potential for CBDCs to be used cross-border, there's this idea of we could have like a space race or a cold war between currencies. So
that's what you mentioned in our introduction chat about the potential. Are we looking at the repeating of the Cold War between US and Russia now in a modern age? About CBDCs. What happens? Dollar was established as probably widely accepted globally currency, most stable one. And that has certain value for United States. Right. What happens in this game? If China, creates the most stable CBDC or it's the first one, what are the, benefits and consequences of something like that? Implications to the world?
Sure. So CBDC is just a digital format. It's saying, this is a format. The underlying value of that asset is still driven by the digital format might make it easier to use. But just because something is easier to use doesn't mean you're going to use it. It helps, but there's got to be an underlying reason as well. So, for sure, the fact that the Chinese, in sort of air quotes, is the Chinese are ahead, the Chinese authorities, creates some tension, rivalry. It means people will say, why are we not doing it? Why are they doing it? We should think about doing it. Or maybe it's like we should partner. So, right, there are partnerships between like Hong Kong and Thailand. Bank of Thailand and HK may have a partnership on CBDCs cross-border. Recently, the UAE and Saudi Arabia joined that partnership with the Bank for International Settlements. That's a central bank based in Basel. So there'll be, potentially competition or collaboration. And so I don't think it's like a Cold War. It's more like a space race, I think.
Space race,
it's a technology thing. It's like, because Europeans and Americans will say, no. We don't know if this is going to necessarily work across our whole society, that everyone wants a CBDC. But like the iPhone, what if they do? And if they do, another country basically has this 5-year advantage or 7-year advantage, that could become a potential problem. But it doesn't mean just because the technology is better that everyone's going to adopt it, right? We could debate, is my iPhone better than Chinese brand smartphones today? It used to be, but is it today?
It's kind of a healthy competition as well.
Yeah.
Right.
Exactly. Yeah. And so I think the underlying reason that people use a currency like the dollar, or like, the UAE is linked to the currency linked to the dollar, right? Is for a lot of different reasons
that we can get into in another episode.
In another episode.
It wouldn't be enough.
Yeah. But I guess by talking about this, it's a reminder of what I said at the start of this conversation, that money isn't this abstract idea. Money it's a social idea.
And this is just money in the 21st century.
Money has always
form.
been a social idea. It's just that 5,000 years ago or earlier, we'd have basically had tokens that were shells or, fragments of precious metals. Whereas today, the token is digital. So that's it basically. Now those tokens people use for games, like children's games, right? They will,
Based on everything that you're saying, and I think you're putting a lot of clarity on what CBDCs are, because probably a lot of people are mixing this with some other concepts. But it seems like CBDCs are here to stay, right? What's your estimate in how many years, let's say, CBDCs will be widely accepted, at least in the developed countries around the world?
Sure. So I think on a 3 to 5 year view, many countries in the world, by size of population, will have CBDCs. I say by size of population because obviously China already has a CBDC or is in trial, in pilot, not academic trial, in real life trial. And, China's 1.3 billion people or something, 1.4 billion. So the biggest country in the world by population is going to have a CBDC. And then others, I don't know if like the big economic blocks are China, Europe, the US. This quarter, so maybe even this month, but definitely this quarter, ECB will make an announcement. And the ECB will likely say, we're going to work on a CBDC. They've already said that we need to study this idea. They had a white paper last year, a consultation document. They've had all the consultation back. So I think it could be imminent. Hey, maybe by the time this podcast is on YouTube,
maybe we'll have to add something.
You'll have to edit this, but I think it's in the next few months. The Eurozone, the ECB will say, we're going to do, pilot testing, do the technology testing. Sweden has been working on this for a long time, but I don't know, for whatever reason, they haven't really got to beyond pilot stage yet. And then probably later in the year, the US will say, ooh, ECB are now doing a pilot.
And then they're going to turn on their engines and go for it.
Yeah.
And I'm curious to understand, what are the implications of this for the banks? Checks, cash, cards.
Yeah.
How are the banks' business models going to be affected, and what should they keep an eye on or do?
So what will happen is, I don't know where you were before you came to Dubai.
Back home,
in Serbia. So before I moved here, I was in the UK, and I can't remember using my checkbook that often before I moved to Dubai, right? Yeah. Was it the same for you?
No, I remember my mom using back at the times of hyperinflation, and then she was writing 17 checks to get in supermarket, but that's the only my memory of checks. Yeah.
So in the UK, you don't use checks. In the US, there's still a lot of use of checks. In the UK, you don't use checks. Like I said, in China, pay with your digital wallet. So the form factors of how we do money and payments are already changing. Like in Sweden, again, or lots of Northern European countries, no one uses a check. In fact, if I speak to my friends from Scandinavia, I don't think many of them have not even seen a check, at least this century. It's I might be exaggerating, but just, people don't use, but here in the UAE, we use checks for high value items for a lot of reasons. And a lot of people still use cash. So CBDCs are just part of this bigger story, which is the format of money is going to go digital. It's going to go digital in the UAE. It's already digital in Sweden. And it's just the format of money is going to go digital. But there'll be many digital formats. So the key message, I don't know if anyone will remember anything I'm saying on this, but if anyone does remember anything I'm saying in this conversation with you, is that it's not like CBDCs are going to win or crypto is going to win, or it's that the whole size of digital money, that if in technology, you sort of the total addressable market, the TAM for digital money is going to expand, and it's going to expand significantly. And so what will happen in 5 or 10 years time is when we're in the shop here in Dubai, we might pay with our phone, and it could be that we're paying through a wallet like an Apple Pay or a Samsung Pay or whatever, and it could be that I've got my credit card linked to it. Or it could be another type of wallet that I have on my phone, but it's actually got stored in it, like a CBDC.
I see.
So it'd be, so it's not going to be like one format that's going to just win. It's not like when it comes to, videos, right? Betamax lost and VHS won. Or electricity. I don't know if you ever think about it, but we have AC, electricity. But there used to be DC when electricity started. And for a while there was AC and DC. There was a competition between different types of format wars. You saw that in videos, all kinds of things. You had different types of, and oftentimes one format wins, not just because it's technologically superior, but here the format I feel like is digital in general, and then but within digital, the different formats. I don't think it's like one. There's not going to be a monopoly of one type of digital money, I guess, is what I'm trying to say.
All right. Okay.
Yeah.
So I think that we put a nice clarity now on CBDCs, and everyone who listened up until this point of the episodes has a good understanding of what CBDCs are.
Yeah.
Now, if we bring into perspective cryptocurrencies that been on a roller coaster ride for the previous couple of years, they just recently announced that the market cap of cryptocurrencies is now like level $2 trillion. And now if we compare CBDCs to cryptocurrencies, can you unpack that for us?
Sure.
Because I'm pretty sure, that a lot of people, when you mention CBDCs, central bank digital currencies, crypto digital, they mix the two.
Yeah. So there's some similarities, and then there's some very big differences. The similarity is they're both digital tokens. They're basically, sort of strings of code. That technologically, they're tokenized. But the technology is also very different. CBDCs will generally be on a centralized database. It might be on a blockchain, but it's probably on a centralized database. Crypto, let's say Bitcoin, give it a name. He said 2 trillion. I think it's around 2 trillion. And Bitcoin is 55-60% of that value today. So it's the biggest and most well-known crypto today. Bitcoin and all other cryptos are not centralized. They're not on a centralized database. They're on the blockchain. So what is the blockchain? The blockchain is simply a decentralized, network of databases of computers, and that's very different. So they both can be tokenized. So that's similarity. They're both digital, but one's centralized, very likely the CBDC, and one is definitely not centralized. And one of the reasons people, particularly the early adopters of crypto, early adopters of Bitcoin, the reason the early adopters of Bitcoin were drawn and attracted to Bitcoin is that in very decentralization. They don't want this central bank or a government, whoever it is. It's not about a particular political regime or a particular ruler. It's about governments in general, centralized power. They don't like the idea of centralized power. And the value of, say, a Bitcoin or a particular type of crypto is the value of that network. So if that network, for, say, technical reasons doesn't work, like there's a problem in the software, then the value will go down and vice versa. Bitcoin has value because Bitcoin's now been around for 12 years, more than 12 years. So it's been proven over time that it works. ironically, it's been proven and it works, but not in the way that the original founders of Bitcoin wanted it to. So Bitcoin...
What was the original idea?
The original idea was that it was decentralized cash. It was a decentralized way to pay. It was a decentralized payment network. So I could move money person to person. I have money. I want to send it to you. I can send it to you, but there doesn't need to be a bank involved. A commercial bank or a central bank, or I can send you value, digital value, through the internet, through the blockchain. But I don't need any centralized authority. But it's person to person is one key characteristic, P2P, and it's payment. Bitcoin today isn't really used for payments.
At all, yeah.
There are some examples, but they're like the edge case. They're like they're like the exception that proves the rule.
Lately, we saw a lot of examples with NFTs, right? People purchasing NFTs with crypto, right?
Exactly. Yeah. But that's like buying one asset.
Yeah, it's not payment.
It's not payment. Yeah, it's not P2P payment. It's like buying an asset. So where it works, or where it's used for payments, is in countries where the existing payment system, particularly cross-border, doesn't work. So if you have friends in, I don't know, like in Africa and Nigeria, a lot of young people in particular, use Bitcoin because it's not easy to move money from Lagos, or more likely from the US to Nigeria. You're sitting in LA or New York and you want to send money back to your family in Lagos or Abuja. It's going to take a long time and it's going to be expensive. And they found that actually using Bitcoin as a transfer of value and a settlement mechanism is quicker and cheaper. Now, if you're sitting in Dubai and you want to move money to London, you don't usually need Bitcoin. You can do that to the banking system.
Exactly.
And it moves fast. So there are some extreme examples, and they're quite big. There's a lot of people who, need to move money in and out of Nigeria or other countries like that. And so there's some examples of the use of Bitcoin for payments. But generally, the reason people own Bitcoin is as an investment asset. Yeah, it's a bit like a meme stock. You own, and the value of a lot of speculative assets in the last 9 months has gone up. And in that sense, Bitcoin is part of that, I'd say, that family of sort of speculative assets, or not speculative, maybe the wrong word, higher risk assets.
Yeah.
And that's obviously, today it might be, in 5 years' time, it's less risky, but today it's risky. And by risky, I don't mean that, I'm not making a moral judgment. I'm just talking about volatility. As in, it moves up and down a lot. Sometimes it moves up and down a lot in an upward direction.
Sometimes, yeah.
Yeah.
And our CBDCs, say that I'm a crypto investor. Are CBDCs something that I should look at? Are they affecting crypto and the value of crypto long term?
Yeah.
Or these are completely two separate tracks?
I think it's like part of the broader family. It's like some people will just want to watch action movies. Yeah. And some people will just want to watch romantic comedies. Some people want to watch them both. And I don't know which is which, but it's like, you've got two different types of movies. You've got two different types of digital money or digital assets. So there'll be some people who like the, idea of Bitcoin for its decentralization. And they will definitely not like CBDCs. There are other people, and I think a lot of people today, who are Bitcoin holders because they just think it's an asset that's appreciating in value. Or it's a cultural phenomenon. All their friends are involved. And it's a cultural or social phenomenon. And for them, CBDCs is neutral. It's not like, because I like Bitcoin, I'm going to like CBDCs. But because they're both digital formats, they might be more attracted to the format. It's digital, so let's think about it. But for sure, the group, like the purists who like Bitcoin for the decentralization, and they should hate CBDCs.
Yeah.
I mean, it's like
on a completely opposite side of crypto. How are banks looking at crypto?
So, it's a long question. How long do we have? The short answer is that banks are there's like you got like two competing things that banks are looking at. One is, why does a bank exist? Because there's a client that needs something done. The client wants to keep an asset safe, money in the bank or in a safe deposit box in some cases, but there's a safekeeping aspect to a bank. People want to move money. There's a payment aspect to that. People want to borrow money. And if a client needs something financially, a financial institution would think, okay, how can I meet that need? So if there are lots of clients saying, I want to own crypto, I want to invest in crypto or trade crypto or send crypto. If you're a financial institution, it doesn't have to be a bank. If you're a financial institution, you'd be like, okay, there's a client need. And me as a service provider, can I meet that need? It's, so that's one on one side. The other side is the bank, because of the regulator, but also because of the intrinsic nature of a bank. Because remember what I said, the root of a bank is someone comes to me and says, keep this safe. The bank in a way is about safekeeping. So there's a reason why banks, not so much the investment bank, they're the trading houses, they're, the traders, the stock exchange guys. I mean, a commercial bank. Custody or safekeeping is like a core part of being a classic or a commercial bank. And that means you tend to be on the cautious side, on the conservative with a small c. Because, someone gives you money to look after, you're gonna build a culture about safekeeping, about and when you get any new thing, any new thing, it doesn't have to be crypto, but any new thing, you're going to look at that new thing and go, oh, does it work? Is it legal? Is it allowed? And so, for example, where we're sitting here in the UAE, naturally a lot of banks have looked at it and go, in the last 5 years, is it even legal? We don't know. So, call the central bank, call your regulator, you have a discussion. And part of the reason why banks can be quite frustrating for, people in the Bitcoin industry or innovators or people on the edge of any new development, new technology is that the bank's initial reaction is going to be, ooh, what is this? And that's not because they inherently dislike crypto. It's just that it's something that's new and it needs to be regulated. Now we're in a situation in 2021 where it's becoming so widespread. You said the value is $2 trillion now, particularly amongst millennials or a younger demographic in their 20s or early 30s. It's almost not a discussion, as in, should crypto be part of my kind of asset universe? So there's a broader sort of change in society, a cultural change. And regulators are much more today knowledgeable and educated. Many regulators are very, aware of like the pros and cons of different crypto. And so you're seeing now in the US more banks being willing to engage with crypto. And you probably see that in the rest of the world as well. And so 2021 is a kind of interesting tipping point. 2021 is an interesting tipping point because crypto has been like a lot of new innovation. It's come from the retail, the consumer side. It's come from ordinary people. And then the institutions catch up. And 2021 is interesting because crypto is slowly moving from being more consumer retail, still is primarily consumer and retail, but it's just more and more institutional. Like family offices are more and more involved. The big family offices are like institutions.
Yep.
And so it's a very interesting year where we're in this kind of big transition process to the institutionalization of crypto.
No, it's interesting. The previous 24 years has been in Citi, and then even before that in this industry. Probably these last couple of years were most intense, especially research-wise, right? There's so many things going on at the same time. It must be interesting. UAE, we are living in a very progressive country, innovative, with agendas that are very forward-thinking. What's their place, UAE's place in this whole game of the future of money?
If I look over the next 5 years, the UAE could be really well positioned to become a hub or a center for digital money, be it crypto or otherwise. Why do I say that? Well, if you're interested in, forward-looking, future technologies, why wouldn't you be interested in the future of money? It's not just about, drones or flying cars or whatever, right? If you're interested in blockchain, well, here's a very concrete, specific use case. And so that kind of forward-looking, and other centers have it as, the UAE obviously has long sort of looked at Singapore as forward-looking center, and the same. Singapore's been one of the jurisdictions that's been quite forward-looking on digital assets. So there's no reason why the UAE can't be a hub. Now, today or in the past, there's not been a lot of crypto activity here. There are some crypto wallet companies, which you'll be familiar with, and I met a few of the founders. So there are some, but this could really take off. Another reason is, just what we lived through in the last 12, 15 months, right, with COVID. It's obviously been a very challenging time for people around the world, but the UAE has generally been seen to have done quite well in terms of how it's looked after its population, how it's, like the vaccination program recently. And when people around the world think about where am I going to set up a business, where am I going to build a business, if you have policymakers and regulators that are forward-thinking, thinking about the future, very future-orientated, and you have a kind of city or several cities here, city-states that are functioning well and that are open, open to new ideas, new people. This could become, whether it's Dubai or Abu Dhabi or the whole of the UAE, it could become a really interesting center, because often when you have a big country usually, just by definition, they'll be like, oh, I've got a very big economy. I don't need to think about necessarily new ideas, or I have existing interests that I want to defend. And sure, that exists everywhere, but
big company and small company, big company and a startup.
Exactly. It's exactly like that. I mean, the UAE is like a 50-year startup now, you could say.
50-year startup, but compared to some other countries around the world, with a lot longer history. This has been a ride. These 50 years, I've been here for 7, and I've experienced part of it. But what they managed to do, not only 50 and last 20, 30 years is unbelievable.
And the digital money world, in a way, fits the UAE because
it does.
It's about it's forward-looking. It's full of people who are, like everything in digital, they're mobile, and the UAE attracts mobile people. It should be a good fit, but it's not. I don't want to be too negative now, having said all the positive things, but it's obviously not guaranteed.
Absolutely.
It's an option. It's not guaranteed that the UAE will be successful in, or want to be. Maybe they'll decide.
The chances are high, but it's not.
It's an opportunity, and I think, from my conversations with entrepreneurs and policymakers in Dubai and Abu Dhabi, I think it's something that people want to explore. It's going to be really interesting.
Super
really
interesting. Yeah. Ronit,
watch this space.
Yes. This part of the change officer and up until now, this was super insightful for me personally. Really. I hope that everyone also got a better understanding. A lot of people out there already understand some parts of this, but as a whole story, I think it's super insightful. And your storytelling skills are also amazing. Let's switch gears now for a bit. So you had a lot of chance to talk about business in a lot of podcasts, a lot of shows. But I'd like to talk about you. But Ronit, because we have to at least for the next 15 minutes.
Okay.
I want to understand a bit more about you.
Okay.
I'm really curious in unpacking and mapping out, the set of events or, things that happen in lives of people who reached a certain, stage in their life, and you've been through a lot, and at the moment you're in Dubai. So, let's start about young Ronit. Tell us a bit more about young Ronit.
So, young Ronit grew up in India, lived in 2 cities. I was born in what was called Calcutta at the time, now Kolkata. And for the first 12 years of my life, I lived between, as I said, Calcutta and what we used to be called Bombay. Now it's obviously called Mumbai. And when I was 12 years old, I moved to the UK. And I lived there for 30 years. So I basically, teenage Ronit and adult Ronit was shaped by the UK. But young Ronit was, I guess, originally, Indian.
So when you look at Ronit today, we're not going to say how many years later.
It's been a few.
It's been a few. How do you feel about what you've achieved, both personally and professionally?
I don't think in terms of a scorecard, in terms of how I've achieved. Hopefully, touch wood, that this journey that I'm on with my family, my friends, it's still got a long way to go. So, so far so good, I'd say. But, there's always ups and downs. Hopefully the next several years, probably in Dubai, there's a lot of opportunity. I mean, it's not that I'm not looking back. But I feel like there's still so much more ahead, including in the next few years, that I don't want to spend too much time thinking about, on my rocking chair, thinking about the past, because there's so much still ahead.
No, definitely. I think that's the way to look at things. Actually, what a lot of people say, very wise people, don't look at the past. Don't even look at the future. Focus on today, on now, and live the moment and try to
that's hard.
Get the most out of it. But it is really hard.
Because we're always planning.
You're always planning,
or thinking what did I do wrong?
Exactly.
We spend as humans most of our time thinking, did I wrong? I wish I could have done it better. Right? That's
the least
natural.
amount of time we spend thinking about what's going on at the moment.
Yeah. And also we spend probably then next is like, what do we do right?
Exactly.
Yeah. And most of our time we're like, I should have done that differently.
Exactly. And if you said should have done differently, if you look back, is there anything that you would do differently? Some lesson that you learned and maybe you will correct that and do the other way around, all the way back when you were young and then until now?
Wow. What would I have done differently? Actually, one thing that when I was in my 20s, even in my 30s, at least early 30s, when you're young, you don't realize all the natural assets you have. So you can eat whatever you want to. You can sleep whenever you want to. You can exercise or not exercise, right? And once you stop being I'm not saying I'm not young, but once you stop being that young, then you realize actually there's these natural assets that you have, and you basically wear them away. But it's only when you start wearing them away completely, you realize, that's a problem, you know. I remember like the first day or the first week in the office in London when I joined my current firm. And I was coming back from breakfast and I had a tray and had all the food piled up. And I think I had two very, like fattening croissants, like almond croissants. My boss looked at me and goes, "You won't be doing that in a few years' time." Right? Actually, I still sometimes do that, but it's a lot.
So the message is enjoy the pleasures while you can, right?
Exactly, because when young Ronit becomes a little bit older Ronit, you can't do that kind of stuff without having negative impacts.
Yes.
But you don't realize that. But
you need to work more to balance it up. Right?
Yeah. And if you look back, I mean, we spend it's about, you don't realize the need for balance when you're younger. Also, like you can tend to do one thing too much. Like you can either just do too much work because oftentimes jobs are hard to get. We think they're hard to get. We're coming out of this COVID period. For many people, their economic security is fragile, and we naturally end up like either overworking or the opposite. We can like just, for some people, you just party all the time, right?
Exactly.
And then fine, but that's part of being, young, right? If you're that sagacious, you're that much of a sage when you're in your early 20s, then probably there's something wrong. I don't know.
Yeah.
But that's when I look back, that's probably what I would have. Yeah,
that's
that search for balance, right? The happy medium.
That's a good story. Yeah, that's a good story. Yeah. All right. So I have an interesting question. You've been, obviously your track record seems, perfect. Citi had, global had, a successful career. But you usually celebrate our successes. There is this global movement that is called How I Fucked Up. And basically the whole concept is let's celebrate our failures because our failures are learning us a lot more about life and business than successes. Is there any failure that you would point out or tell a story about that taught you a big lesson?
Oh, wow. Failures. There's just so many of them for everyone, right? I mean, everyone.
Absolutely.
I mean, it's like by definition, right? Like let's on a conceptual level, you could say, you read up my professional biography a few times in this conversation. You could say, you did X, Y, Z. How great is that, right? But what if there was actually something else that I should have done or could have done? I moved to Dubai 5 years ago. But what if I had moved to Dubai 10 years ago? Or I'm not saying that was a good idea. I'm just saying. So oftentimes the failure isn't something you did that was bad. Oftentimes the failure is something you didn't do. Like, what was that quote? There's a famous quote by, you're going to miss 100% of the shots you don't take.
Exactly.
Who said that?
I'm not really sure, but I know
you can Google it later.
We're going to Google it and quote it, yeah.
It's probably a basketball. I'm going to embarrass myself. Probably like Michael Jordan.
Michael Jordan.
Yeah.
Like that, yeah.
But it's a classic quote. But that sentiment is literally, the shots you don't take, you're going to miss 100% off. And I could tell you about the shots I took and that didn't work. But actually the bigger failures are the ones that, and that's for all of us. Like, oftentimes we're like, I should do that, or could I do that? Or
is there any that you can recall that you didn't take? Some shots?
Oh, man. There'd be loads, right? There'd be loads. Like I said, I spent a couple of decades working in one city. Should I have moved around more? Not so much between institutions. I'm just saying between cities. Yeah, geographically. Or should I have moved between sectors? Not between different banks, but actually, 5 or 7 years ago, should I have when some of my friends were setting up their whatever, FinTech, whatever, should I have gone and joined them? I'm not saying it would have worked, but it was,
you never know, yeah.
You never know. And so that's always I think that's always the biggest challenge. You look back and go, what are the shots you didn't take? Because I think those are the bigger ones. The shots you take and you miss, it's almost like boring. It's like, okay, here's a list of, but it's a good idea. It's a good idea. People put some people put their kind of CV of failures.
That can tell maybe even more about you if you're transparent about it and then share the lessons that you learned, right?
When I applied, you mentioned my biography in banking. I got into it when I was 24, but I can't remember when I was 22 or something. I applied to dozens of banks. None of them gave me a job when I was 22. I can't remember the exact number, but it was a big number. Was it a failure? But at the
learning
time,
curve, yeah.
At the time, if you're a 22-year-old and you're like, no one gave me a job, and then many of those firms later, would call me. And say, I'm like, no, get lost, But all the way, I'm sure through my 20s, I applied for things that didn't work out.
I have one or two more questions for you, and then we can we can wrap it up. So you heard about Ray Dalio probably. He wrote the book Principles.
Yeah, I've not read it, but yeah,
you don't even need to read the whole book. You can just go through it and read randomly.
Yeah,
he's sharing his life and work principles.
Yeah.
Do you have any life or work or both principles in life that you followed or that shaped you that you can point out?
I think the biggest human nature is we jump to conclusions about people and situations. If you can keep an open mind, about the situation you're in or the person you're talking to, it doesn't mean you have to basically be positive about the situation or positive about the person, but keep an open mind. That's going to save a lot of pain and stress and heartache, because a lot of us will jump to conclusions or see either the positive or the negative too early. I think that for me is, something I'm trying to, I'm not saying I've got there, but it's something I'm trying to aspire to. Don't, keep an open mind.
Actually,
everything.
You just repeated one of the principles that Ray Dalio has.
Excellent.
He
and
says,
I didn't even read his book.
Be radically open-minded.
Yeah. I mean, I don't like his idea of radical transparency.
That's a different one.
That's a different one. I think it's a very culturally specific idea. And I'm not sure it's actually it's universally applicable, that idea. But but open-mindedness, it's hard. Because we all, he's a bad guy. She's a good girl. Or this is a great situation. This is a disaster.
This says this is a failure.
Yeah.
Ronit, thanks so much for coming. I really enjoyed the conversation. You inspired me. I learned a lot. Thanks for coming, man.
Thank you for having me.
Guys, thanks for staying until the end. If you like what we're doing here with the Change Officer podcast, please like and subscribe. Leave any comments that you would like us to answer to. And stay tuned. There is another episode coming out next Monday. Take care, everyone. Thanks.